Today was a phenomenal example of how you can use the stir markets along with our interest rate tracker to give you an incredible edge when you're trading the spot FX market. We have the risk event PPI data that pops off from the United States here, and it is outside all the range of analyst expectations, which means it should be a market mover. But when we look over at the charts, we start second guessing ourselves, right? You have the spike down, so the spike down is about 85 to the 116.48, really nice spike down, and then price starts to retrace. And what are you starting to think? You're starting to think, well, this isn't major inflation data, it's not the NFP, it's not CPI, it's kind of a second tier release, but the Fed is really concerned about inflation and employment, and they're concerned about some of these numbers. So what should I do? Should I get in here? Should I get in short, hope it goes lower? And then what happens? Price goes against you again. And then what happens if price goes against you again? And then you're sitting up here and you're like, I mean, this is great risk to reward. I could short it here. I've got some nice little resistance up here. I could put my stop up here for what, like a 10-point stop. But what do I do, right? And this is where confirmation, having another market to confirm that this euro-dollar pair could go lower, is so critical. So if you look over at our interest rate tracker, one of the really cool things that we give you is the near real-time rate meeting adjustments as this is happening. So what this means is this tracks participants in the stir market who trade interest rates for a living, right? This is all they do. So it's another market that's saying, okay, is this data point real? Is it actually going to influence the market, or does this thing just retrace? So here, what do you see? Well, you see we started the day out with about 26 basis points of easing, right? And then this event breaks. And what do you see in the first 15 minutes? We start pricing out the easing. So we go from 27 basis points to 26. We keep going, and then we pop up to 23, and we keep going throughout the day. So what does this tell you? Well, it tells you, when you're here and you're, let's see, 46 minutes, well, actually about 15 to 16 minutes after the event, you're getting confirmation that spot is actually not telling you the truth, the spot market. What's telling you the truth is the interest rate market. Interest rate market says, you know what, there might not be quite as much easing. Yeah, we're still looking for a rate cut in September, but maybe with not exactly the same confidence. So it sets up a really nice intraday short. And you can use this as price comes up and comes back against you to look and say, okay, I can have this confirmation tool in my pocket that professional traders have that most people just do not have access to. Same thing goes with the pound, right? Same thing goes with some of the other dollar pairs. So guys, if you're not trading with this, go check it out. It's right on the website, financialsource.co.